Hello there. Welcome back to Financial Accounting Info. In this video, I want to look at the preparation of supplemental entries in the cash receipts journal and cash payment journal. And also, we are going to look at the preparation of the bank reconciliation statement. We are going to start by looking at 1.1. So our question reads, the information given below was extracted from the books of Sasco Cash and Carry Traders. On the required part, you have got 1.1, which is saying record any supplemental entries in the cash receipts journal and cash payment journal on 31 March 2014. Then close off or cast the bank columns in both the journals. So we are going to close off the bank columns only in the journals. Then 1.2, update the bank account in general ledger and balance it. Then 1.3, prepare the bank reconciliation statement on 31 March 2014. So we're going to on the information part, we are given the bank reconciliation statement as at 20th February 2014. So exactly, this is the bank reconciliation that we have for the previous period. Let's take note that the current document that we are preparing are for the period ending 31 March 2014. So it means 20th February 2014 is for the previous period. So we go down. You'd see that we are also given the cash receipts journal of Sasco Cash and Carry March 2014. So these are the balances that we're going to start with in our updated cash receipts journal and cash payment journal. So we also have the cash payment journal, and then moving on to the next page, you'll see that we now have our additional information ranging from additional information number 1 going down to information number 11. So this is the information that we have according to this video. And also we go to the next page, you'll see that we've got a continuation of additional information that we need to look at. So our additional information is going down to information 16. So this is what we have. Then we can now try to go back to our answer section. So we'll see that we have got we come here, you'll see that we've got the bank reconciliation statement is already prepared as it appears in the answer book. And we also have the bank account. And this is the cash receipts journal. And then we also have the cash payment journal. So we are just going to go item by item and post the entries to the necessary document according to the accounts and statements that we are given. So we go there, we'll see that this is what we have in terms of our additional information. So we are, of course, we are going to start with our opening balances. So if you go to the previous page, you'll see that we have got our opening balances starting with the cash receipts journal. We've got an opening balance of 16,660. So we can indicate there that on cash receipts journal, we have 16,660 as our opening balance. We go to cash payment journal, we have 15,660 as the opening balance. And then obviously we also have the bank account. Of course, in the bank account, we are going to have our opening balance as the balance that we are having in the previous periods bank reconciliation statement. This one, which is going to act as opening balance in the bank account. So we go there and start with we can start with the bank account and put our 87,700 as the opening balance. So we can try to find out which side are we going to put now in the bank account. We are seeing that it's a balance according to the bank account 87,200. So what does it mean? It means this is a CD on the debit, so it means BD will be on the credit. So basically, we are saying it's a credit balance in the bank statement. So if it's a credit balance in the bank statement, it's going to be a debit balance in the bank account. Remember, what we have on the credit side of the bank statement should be on the debit side of the bank account in our ledger. It becomes the opposite. And what is on the debit of the bank statement should be on the credit side of the bank account in our ledger. So in this case, we are saying we have got 87,200 on the debit side as our balance CD. So it means our balance BD is the credit. So it means our balance, this balance is a credit balance. So if the bank account, we are going to start with the balance BD on the debit side. So we go there and check the bank accounts that we have. So if you come here, you'll see that this is our bank account. So we are going to put our balance BD on the debit side. And we are saying our balance BD. And then obviously we've got a column for date, remember this is the beginning of the period, which is 2014 March 1, 2014, 2014 March 1. And then the amount that we have is 87,200. We're saying 87,200. So this is going to be our open balance in the bank account. Then obviously we check other balances that we are given. We have got now the cash in this journal having 660 balance. So we go to the cash in this journal. Go to the cash receipts journal, input our 16,660. So in cash receipts journal, we have it here. And the dates that we are having there, it's going to be February, end of February. So it's going to be let's try to let's just cross check in terms of the dates that we are going to use there. So it's going to be 1 March. It's going to be 1 March as our opening balance for the current period. So here we are saying dates is going to be your March 1. And all the details we are saying this is our totals for the cash receipts journal. And the totals are brought forward. And then the amount is 16,660. And we check in the sales column, we also have the sales and data control. So obviously we go there to check according to that information. We see that for sales, we've got 4,500, for data control, 1,450, sundry accounts, 2,710. So we are going to enter them as opening balances again. We go there. We can just create some spaces. So we are here, we are seeing for sales, we've got a figure of 4,500. For data control, we have 1,450. For sundry amount, 2,710. So these are the opening balances that we have. Then we try to go to the next one, which is obviously going to be our cash payments journal. So moving on to the next document that we have there is cash payment journal. So we are seeing that we've got for the bank we have got 15,660, creditors control 3,870, trading stock 4,800, and then we've got the sundry accounts we've got 6,990. So these are the opening balances that we are going to start with in the cash payments cash payment journal. So we've got our cash payment journal here. So we are saying again in terms of our details, we're saying totals. And then this is brought forward. The bank amount that we have 16,000, sorry, it's 15,660. For the creditors control, we have 3,870. And then you can try to enter some of the figures that we have there. Now we have our purchases that we have there. Let's just try to see. In terms of purchases, we have 4,800. Sundry amounts, we have 6,990. And then we can see that those are the amounts that we are having. So in terms of our day, remember we're saying it's March 1. Then the document number, we still don't have a document number, so I can leave it blank. So this is what we have said the cash payment journal. So it means we have completed our opening balances, but also we have got the bank reconciliation opening balance that we also need to find out. So we can try to see in terms of the additional information if we can get an opening balance of the bank reconciliation. So if you come here, additional information, you see that for the bank reconciliation, we are told that on item 2, the bank statement showed a favorable balance of 69,624 runs on 31 March 2014. So exactly, this is are going to be our opening balance. So remember, we are reconciling. Remember, this is taking place at the end of the period, and we are saying the 69,624 balance that we are having is incorrect. Remember, the purpose of the bank reconciliation, we are trying to reconcile the balance of the bank account in the ledger and the balance that we are having from the bank on the bank statement. So remember these two documents that we are having: the bank account in the ledger and the bank statement showing the document that the bank is keeping for us, which should be a mirror of what we are having in our ledger. So when there is a difference in the final balance that we are having in the bank account in the ledger and the balance that is on the bank statement, there is a need for reconciliation so that we make the two balances the same. So in this case, the 69,624 balance that we are seeing there is an incorrect balance. That's the balance that we want to reconcile. So we are going to start with it in the bank reconciliation statement as a credit balance as the bank statement. So you see that it's a favorable balance. So if it's a favorable balance, it means on the bank statement it would be a credit balance. But if it's an unfavorable, it means it's going to be a debit balance on the bank statement. So in this case, it's a favorable. We take it on the credit side. So we go to the bank reconciliation. So on the bank reconciliation now, we are saying we are going to give a description of saying credit balance is going to be credit balance as the bank statement. So we can try to bring it here and say our credit balance as the bank statement. And we'll put it on the credit side. Remember the balance that we have there, which is we can just maybe try to again check that balance. We are given it here. So the balance that we're talking about is here, 69,624. So we are saying 69,624. So we're here, we're saying 69,624 on the credit side. So this is what we have. So it means we have completed all the opening balances that we are given in the question. So we can now go to the adjustments. So for the adjustments, we'll go to additional information. That's why we're going to have the instructions in terms of the adjustment that we have. So we start with adjustment number 1. So we check, we are going to read it, and then we try to see where should we post that adjustment according to the documents that we have, that is the bank reconciliation, cash receipts journal, cash payments journal. So first one saying the bank statement received from New Africa Bank reflected the following amount. So what it means is these items that we have on the bank statement are not there in the ledger, so you need to update them in the ledger. So the issue is we are going to group them. Remember, we are also going to have bank charges inside those items. So we can group all the bank charges so that we can post them as one amount. So in this case, let's just try to see. We have got the cost of checkbook, which is a bank charge. We also interest on debit balance, a bank charge. Cash deposit fee, bank charge. And service fees are also bank charge. But interest on credit balance is going to be our interest income. It's not part of our bank charge. So we can add this for, whereby we are saying 360. We add our 11,875. We add your 1,200. We add your 525, which is 1, 2, 3, 4 items, which are 1, 2, 3, 4 items. So we add there, the total that you are supposed to get there for the bank charges is going to be 18,000. Let's just try to see 13,960 is going to be the total. So remember, these are bank charges, and they're going to reduce our bank balance, and we are saying they are going to appear on the debit side of the bank statement. So they are appearing on the debit side of the bank statement. So when they are on the debit side of the bank statement, they should appear on the opposite side in the bank account in our ledger. So they should be on the credit side. So on the credit side, that's where we got our cash payment journal. Remember, our bank account, our bank account is reflected as the debit side. That's where we are going to have our cash receipts, journal payment items, and then on the credit, that's where we're going to have the cash payments journal. So in this case, we are saying these bank charges will be on the credit side of the bank account under the cash payment journal. So we are saying they are appearing on the bank statement, they are not there in our ledger. So we need to update them in our ledger. So we put them under the cash payment journal where they are supposed to be. We is 13,960. So we look for a cash payment journal. So for cash payment journal, we are going to say we are going to say we have got we can just refer back there in terms of the details that we are supposed to put. We are seeing that it's the payee is a New African Bank. We are paying the bank to New African Bank, but the bank charges are being taken by the bank, which is the New African Bank. So all the details part we're going to put our New African Bank, and then we are going to see that the amount that we have is 13,960. So those are the items that we are going to reflect in the cash payments journal. We come here now, we say for the details, we are saying New Africa Bank. New Africa Bank. And then the amount that we are using is 30,000, 30,960. And then document number is going to be on PS. And then obviously on our, we are going to have, this is at the end of the period, so we can just say March 31. And then we have our, so we check whether this 13,960 qualify, 13,960 qualify to be under creditors control, qualify to be under or purchases or sundry amount. So it enters in one of those. So you see that these are just bank charges. They are not, we are not paying creditors and they are not purchases. So obviously they fall under sundry amount. So we put a sundry amount, which is 13,960. And then when you put under sundry amount, you need to put the details. Description of the details. But if you put other pages and credit control, the details is that is their creditors control and pages, so you don't need to write here. But for the standard amount, we described it there. For 13,960, we are saying they are bank charges. So that's where we want to indicate that they are bank charges. So we come there, say bank charges. So this is what we have got into that. But if you go back, you would see that we also have the issue of interest income. Remember, that was the last item on the information that we are given, that we have got interest on credit balance, which is 102, which is going to be our interest income or interest received on current account. So since we are receiving, it should be on the credit side of the bank statement. It's appearing on the credit side of the bank statement, so we should update it to the debit side of the bank account in our ledger, which is our cash receipt journal. So we go to our cash receipt journal. We've got our cash receipt journal here. Remember the dates that we are reflecting. And we are saying here, obviously, we have our BS. And we are saying it's March 31. And all the details. Remember, we are receiving it from New Africa Bank. So here we are writing New Africa Bank. And then the amount obviously is 102. So here we are saying 102. And we see that does it qualify under sales? It doesn't qualify. and you check if it qualifies under data control. You see that it doesn't qualify. So we got if it doesn't qualify in these two, we put it in the standard amount. So the standard amount that we have there, we put 102, the same figure that we have here. And our details, we are going to say our interest income. So we just describe it as interest income. So this is what we, or you can just write it as interest on current account. So this is what we have on that one. Then we go and check in terms of the next transaction. So we can try to remove this so that we can create some space. So here now on the second, on the next adjustment that we want to look at, so remember we have already adjusted, updated in terms of the opening balance of bank reconciliation. So we can come here, item 3. So we are now on item 3, which is here. We are saying the bank had credited an outstanding deposit of 79,200 rands on the bank statement for March 2014. So basically, we are seeing that so this outstanding deposit, if you go back to the question on the initial information that we are given in the question, you see that 79,200, that is outstanding deposit. We are having it on the previous month's bank reconciliation, which is here. So it means it was now it was an outstanding deposit in the previous bank reconciliation statement. So in the current period, it was now deposited. So we have no issue with that one. It means it's now correct. So there is no adjustment which needs to be done for that one. So we go there. We go there and check in terms of the next one from that one. It means our 79,200 that we have here it's now appearing, so it has been updated. So no need to adjust it. Go to the next one. A deposit of 83,850, which was made on 31 March 2014, did not appear on the bank statement. So you see that this transaction is affecting our bank reconciliation. It's a deposit that was made. Remember, whenever we issue money to go into deposit, it's recorded there and there in our book. So it will be appearing in the bank account in the ledger, or it will be there in the cash receipts journal. So it needs now to be updated on the bank reconciliation because they are saying it's not appearing on the bank statement, so we are supposed to update it on the bank statement. So remember, this is now an outstanding deposit. And an outstanding deposit, when you deposit money in our bank, it's supposed to appear on the credit side. So we're just going to indicate it as a outstanding deposit. So in bank, we go to the bank reconciliation. If we go to the bank reconciliation, we are saying the description that we have for now is saying credit outstanding deposit, and then up the figure that we have. And I remember from the same that we are given there is that 83,850, and it should be a P on the credit side, 83,850. And it means we are done with that one. We go to the next one. So on the next one, it reads the following checks had not yet been presented to the bank for payment. Had not yet been presented for the bank for payment. We would check number 865, and we would check number 970. So we try to check to the information that we are given in the question in terms of those checks. We need to identify which checks are being referred to there. So we can go back to the information that we have in the question. But before we go to the other information that we have in the question, we can come again to the next adjustment that is there, which is 6. It's saying check number 865, which is this one. Was lost in the post. This check, which was originally issued to Vodacom for telephone, must now be cancelled, and a new check will be issued. So it has to be cancelled because it was lost. So what we are saying is check number 865, we are not going to put it in the bank reconciliation. Remember, these were all checks that are not presented. You should know that they should be put in the bank reconciliation. But they are not but this one was not presented, but it was lost. So when it was lost now, if it was lost now, it means it's not going to reach the bank. So we're going to remove it in our books. But already in our journals is there under the payments. So it's on the credit side of the bank account that is under cash payment journal. So to remove it, we go to the debit side of which is now the cash receipts journal. So you're supposed to enter it in the cash receipts journal to remove it. So we are entering a case number 970, and we try to see the amount now of check number 970. We find it in the bank reconciliation of the previous period, which is 3,900. So we go to the cash payment journal, so to the cash receipts journal, and put 3,900. So let's just try to see. So check which needs to be removed is 3,900. So we go to our next check that also needs to be adjusted, which is our let's just try to see here. We have got our 865 again. We have not presented. So it means this one, we need to go to the check number 865. Sorry, the check number 865 is the one which needs to be removed, which is this one, which is supposed to be recorded in the KTC journal. So here we can just try to put whereby we are saying so what we are saying is this check number 865 is this one which is supposed to go to the cash receipts journal, because we are saying it is under cash payment journal and it was lost, so we need to remove it. So we go to the debit side, which is we go to the debit side, which is the cash receipts journal, and put it check number 865. So this is exactly how we are going to adjust it and adjust it there. So we check the amount now of check number 865. Go back there at the beginning of the question. That's where we are having that adjustment. So it seems that we have got 865 here, which is 18,300. So we're going to put our 18,300 in the cash receipts journal. So we go to our answer section and put our 18,300 in the cash receipts journal. So obviously, we go there, and this is our cash receipts journal. So we are saying for the cash receipts journal, we have 18,300, and for the details, we can maybe just indicate that it's a check that has been cancelled. Check cancelled. Here you can just indicate that it's a check cancelled. And we try to see whose check was that. So we can always go to our information describing that check and see what it was checked for, which is it was for Vodacom. Is this check was originally issued to Vodacom for telephone. So we can just write Vodacom. So the check cancelled, so we can put it in brackets and then write out Vodacom. So we are saying here we put our brackets and then we know that it's for Vodacom. And then on the amount here, we remember it's 18,300. So we're saying 18,300. And we try to see, does it qualify under those columns? That is bank, it's under bank, under sales, it's not sales, under data control, it's not data control. So what it means is we have to put it under sundry account, a sundry amount, which is 18,300. So you come here and we say 18,300. But there's a description in terms of details that we have to make there on what is it. We refer back again to that transaction. We come here, you see that it's described here as telephone. So it's an expense for telephone. So we just write telephone. So here it means we are saying it's telephone. So this is what we have. And then we've entered what is required, and obviously we can go there. So on document number, we know that it's 865, check number 865. So we just write the number, which is 865. So this is the reference that we have, check number 865. Then this is what we have, and then we also have another check according to those unpresented checks. We've got now 970. So 970 has no problem. So it means we need to put it in the bank reconciliation now. The check number 970. We check the amount again at the beginning of the question. You see that 970 is here, we've got 3,900. So remember, it's a check that has been issued, so it should appear on the debit side of the bank statement. So on the debit side, that's where we are going to put it. So we are saying we adjust it in the bank reconciliation, and we are saying this is debit outstanding checks. So we are going to list them, all the outstanding checks here. Debit outstanding checks. So we have got check number. Check number. This is 970. And we are saying 3,900. We put it on the debit side, 3,900. So if there are other outstanding checks, we're going to just put them just beneath here. We go there to see on the next adjustment that we have. So after check number 865 adjustment, we go to number 7, which is saying the bank statement of March 2014 included the adjustment for the wrong check number A52, which appeared on the previous month's bank reconciliation statement. So yes, there is a wrong check of A52, which is on the previous month's bank reconciliation, but it is said that it's appearing again in the recent month's bank reconciliation. So try to go back to see that A52 check, which is indicated here, check number A52 incorrectly debited. So it means this check is appearing again in the recent months bank reconciliation. So what does it mean? We can just try to see how it is appearing. I think we have got the description there. They're saying each appeared in the previous month's bank reconciliation. So we need to find out how we are going to adjust it by maybe referring back to the information that we are given at the beginning of the question. So if you go back, you'll see that this check number A52 was incorrectly debited. So remember, information that will be having on the bank reconciliation statement indicates that it's something that was, in the case of this one, is something that was done incorrectly. It was corrected. So this correction is not effected at this point. A bank reconciliation is just a document that's being put in place. So during the current period now, it was now effected. In other words, the 2,600 was now credited. That's what that statement is saying. The 2,000, the 2,600 was now credited. So it was now corrected. So that's what our statement is trying to say by saying the bank statement for March 2014 included the adjustment for the wrong check number A52. So it means there's no problem with this check. It was now corrected. It's not going to affect any adjustment according to the explanation that we are given there. So we can just keep it. We go to the next one. A check received from P Princess as part payment of account had been dishonored due to insufficient funds. That is 1,880. So remember, when a check is dishonored, it means it wasn't processed. But in our books, as we issue that check, it was recorded. This one we received it from P Princess. So the moment that we received it, it was recorded in our books. But when it reached the bank, it was rejected. So it means we need to remove it in our books. So it was a check received. So it means it was on the debit side of the bank account. That is under the cash receipts journal. But now, since it was dishonored, now we need to go to the opposite, that's the credit side, to remove it. So the credit side becomes the cash payment journal. So you've got 1,808 under the cash payment journal, and you see that it was received from P Princess under the details. P Princess 1,880. So we go to the cash payment journal. So this is our cash payment journal, and we are saying for the details, we are saying P Princess Pre-Princess, and it's a refer to draw, which means a disordered. And then the amount that we have is 1,808. And then we check in terms of if it qualifies under creditors purchases. We see that it doesn't qualify. We put it under sundry. We put it under sundry as 1,880. And we check what description are we going to give. Remember, it was a payment that was and it was a payment from a debtor, obviously, and it was rejected. So you can just maybe indicate it as a debtor's control. So this is why we are seeing debtor's control, is because we have received it. So it means obviously it was a debtor who was paying. And since we are rejecting it, we are putting it now, since it was rejected, we are putting it now under cash payment journal. In other cash payment journal, we don't have a column for debtors. That's why we are putting it here. So this is what we have, and then we go to the next one that we have. We are now on the next one, which is 9. So 9 reads the following electronic transfers were created on the March 2014 bank statement. Rate from Baker Limited 5,500, and we have a fixed deposit with Absa. It matured 55,000 rands. So we can maybe try to go through it again. The following electronic transfers were credited on the March 2014 bank statement. So we've got 5,500 from Baker Limited, which is 5,500 from Baker Limited. And then we have a fixed deposit with Absa, it matured, which is 55,000. So it means these ones are appearing on the bank statement, but they are not there in our journals. So we are receiving money there. And the key term that we have there is that they were credited. They were credited. So if they were credited, it means in our bank account, they are supposed to go to the debit side of bank account, the ledger, which is the cash receipts journal. So we're supposed to put them under cash receipts journal. So since they are electronic transfer, we cannot get to know them in our books in the business, because they are transferred electronically to the bank. So we can only get to know about them when we get hold of the bank statement. So we need to update our journals by putting those items. So we go to the cash receipt journal and we put 5,500, and it's for Baker Limited. And then the other one is for Absa, and it's 55,000. So we just go and need to put them under cash receipts journal. So we are saying we come here and we are saying BS as a reference, and then we are saying details. And we got the one from Baker Limited. Baker Limited, there we can just maybe try to correct here. So this is Baker Limited, and the amount that we have for Baker Limited is 5,500. And then obviously it qualifies under sundry, so you can just put it under sundry amount. It's 5,500. And then on the description, remember it was rent income. And then we also have the other one, which is for ABSA. We can just enter it again. This one is for ABSA. Again, with BS, and then we say ABSA. And then the amount that we have is 55,000. And also it qualifies under the sundry. So we go to the sundry. And you're saying 55,000. 55,000, and under the description is a fixed deposit, which is matured. So we can just describe it as a fixed deposit. So this is what we have in terms of that adjustment. So we go to the next one. So we are saying we are on item 10, which is saying a debit order was issued in favor of SAE Group on the 28th March 2014 for building insurance. So remember, a debit order again is something that is effected at the bank before we get to know it in our books. We can only get to know about the debit order when we get hold of the bank statement. So obviously, it's not appearing in our journals, so you need to put it. But a debit order, obviously, what is being debited there is the bank statement. And if we are debiting the bank statement, it means in our books, in the ledger, it's going to be on the credit side of our bank account, which is our cash payment journal. So we're going to put our 5,800 in our cash payment journal, and we've got a description of SAE Group, and we know that it's insurance. So insurance is the description that we're going to put under sundry. So we go there, under cash payment journal. We are here, this is our cash payment journal, and we are saying we put our document, obviously BS, and we are saying the one that is for SAE Group. And the amount that we have there is 5,800. And we are saying it doesn't qualify under creditors control, it doesn't qualify under purchases. So we need to put it under sundry, so 5,800. And we are saying it's insurance. So this is what we have, and then we can try to see on the next one. So on the next one, from that one, we go to 11, which is said on 11 March 2014, check number 971 for 7,200 rands was drawn in favor of a keys for purchase of a desk. The check was dated to 30 May 2014. So May is out of our, a further date, a later date, according to the period that we are preparing this reconciliation. So we've got an amount of 7,200. So we can try to go through it again. Check on 11 March 2014. Check number 97147,200 was drawn in favor of a keys for purchase of a desk. The check was dated 30 May 2014. So obviously, this is going to be an outstanding check because it's check it's dated 30 May, which is a date after the period that we are. So it means obviously it won't be appearing on the bank statement, but we need to update it on the bank statement. So if it's a check that has been drawn, it means it's supposed to go to the debit side as an outstanding check, 7,200. So go to bank reconciliation, and we are saying it's check number 97. We can maybe try to recheck the check number. And 971. So we can have 971, check number 971. We also have number. There's an outstanding check 971, and it's an amount of 7,200. So that is what we have. We can now try to see the next one. We go and see again what we have next. So it seems this is the last that we have on this page. So you can go to the next page and try to see what COP is saying. Check number 982 for 2,880. 2,880 appeared only in the cash payment journal. So obviously, this is an outstanding check again. That should be on the bank reconciliation. So under outstanding checks, we are ending another one for 2,808, which is check number 982. So we go back. Conciliation. We are saying check number 982. So here we are saying number 982. And it's for an amount of 2,880. And then we go again to check what's the next one. We are now on the next page. We are saying number 13. Check number 981 for 2,430 issued to CNA for stationery was incorrectly entered in the cash payment journal as 2,340. So this error is in the cash payment journal. So you have to correct it in the cash payment journal. So we have entered 2,340 instead of 2,340 instead of 2,410. So we entered a smaller figure. So you need to put the difference so that it gets to 2,410. So we calculate the difference by saying our 2,430 minus 2,340. We see what amount we get there. This is CNA, which is our, let's just try to calculate as such. We'll say 2,430 minus 2,340. And we are going to get your 90. So it means here our answer is 90. So you need to put 90 on the credit side under payments, because this check is under cash payments, like as indicated. So we need to put 90 so that this 2,340 gets to 2,400. So you go under cash payments. We know that it's CNA and it's for stationery. Simple as that. So we go to the cash payments, which is on the previous page. So our cash payments is here. So we are saying check number 981. So here we are saying 981. We refer it as 981 and it's CAN. Then in brackets, we can say error corrected. Error corrected. And the figure that we have there is 90. So you're saying 90. And obviously, it doesn't qualify under creditors control. And also, it doesn't qualify under purchases column. So we go it, put it under something amount, which is our 90. And on the description, we know that it's stationary. So we are going to say stationary. So this is what we have. Right, we go to check on the next one after that one. So under the one for our stationery, we check which one is next. Which is 14, check number 999 was erroneously debited twice on the bank statement. So this error is only on the bank statement, so it's going to affect only the bank reconciliation. So we've got an entry which was debited twice, 5,328. So we need to remove one of the 5,328, and we are supposed to go to credit as we are crediting a check that was incorrectly debited. So we go to the bank reconciliation, and the amount that we have, you can recheck the amount is 5,328. So we go to the bank reconciliation. We are here and we are saying it's we are crediting check number 999 incorrectly debited. So we go there. Let's say credit check incorrectly debited. So you go to credit side and put the check, which is 5,300. and 28. Right, we go and see the next one. So we go to 450. Check number 145 550 rands withdrawn by the owner out of his personal current account appears on the bank statement of the business. So check number 145 for 550 withdrawn by the owner out of his personal current account appears on the bank statement of the business. So you would see that this check is appearing on the bank statement. So basically, these are drawings that are taking place, and obviously it's money of the business that is taking place. So there is no adjustment that we are supposed to make for that 550, because we are just going to give a description in the books of accounts that is with the drawings that is taking place, although it was taken by the owner for his um, personal use. So we are going to we are not going to make any adjustments in terms of that 550. So we can just ignore that one. So we see that we are now on the last one. The register for post-dated checks received reviewed the following checks. So post-dated checks, we have got check number BZ 111 770. Check number 51 630. So these post-dated checks, we are not going to record them. Why? Because if they are just appearing in the register, they are there in the register, but they are not yet issued for payment. So we are not they are post-dated checks received, reviewed the register for post-dated checks received, reviewed the following checks. They are in the post-dated checks register, but they haven't been issued. So we are not going to record them. But if they were issued for maybe to the bank, that's when we are going to record them. We record a check as soon as it is issued in the books. What is going to happen after that is going to be lost on the way. It will be there in the books. But if we haven't issued it, it means it's not appearing in our books. So we are not going to make any adjustments in terms of that type of a check. So it means this is going to be our last item. And having that as our last item, we now go to our accounts. We can start with our journals and try to balance them. Let's start by going to our journals. So if you come here, you'll see that, remember, we've got an instruction that's there, which you need to revisit. Maybe you can go where we have got the question, which is saying, let's just try to revisit where we have the question. The question is giving an instruction that close off or cast the bank column in both the journals. So what is going to be closed off only is the bank columns only. So we go there. You see that this is the bank column for the cash receipts journal. So we can just add there. So we are just going to indicate here, and then we put the total. So we can just try to add 16,660. We add 102. We add 18,300. We add 5,500. We add 55,000. And then the total that we're supposed to get there is going to be, let's try to add. So the total becomes 95,562. 95,562. So it means we've added the bank column. We go to the next one, which is cash payment journal. We do the same, whereby we are creating a double line so that we can add So we say 15,660, we had 13,960, we had 1,880, we had 5,800, we had 90. And let's try to find out the total that we are going to get there. So if you add correctly, we're going to say get 37,000. You are going to get your 37,000. Let's just try to see. Here you're going to get your 37,390. So this is what we have in terms of our cash journal, cash payment journal. So this total that we have can now assist us to go and complete the bank account. Remember, we've got the bank account that we have here that we need to also complete. So we can take that information whereby we are going to transfer the totals in the bank columns here in the bank account. So remember the total receipts, it should be on the debit. Total receipts, we're saying here total. And then total payments should come on the credit. Total payments. And then obviously this is March 31, 2014. March 31, and then this one is March 31 again. So what we are going to do is for total payments, the total that we got there, the total that I'm going to put there, on the total receipts, the figure that we got is 95,562. On payments, total payments, we got 37,390. So these are the figures that we have there after we added the bank columns. You can just try to refer back to those figures. For cash receipt journal, 95,562. Then if you go to cash payment journal, it was 37,390. So those are the figures that we transferred there in the bank account. So from there, we can now be able to put our double lines and be able to balance our bank account. The same applies here. We put again our double lines. So we are seeing that if you add total of debit and credit, you see that obviously the debit is going to be a greater total. So the total of the debit there, let's try to see add there, 87,200 plus 95,562. The total that we are supposed to get is 182,762. Same applies here. It comes again on the credit side in between the double lines. And then you subtract 182,762 minus 37,390. You are going to get a balance figure of 145,372. So this is now your balance CD. So your balance BT comes on opposite side below double lines. Same amount of CD, 145,372. So this is what we have there on the bank account. Then bank reconciliation, again, we need to balance it. So we go to the bank reconciliation. So bank reconciliation, we also put our double lines, whereby it's a double lines here. So in terms of our double lines, we have it. So the next step is to try to compare the debit and credit, the totals. So you see that if you add there, you see that the total of the credit is a greater total with a total of it's a greater total with a total of 159,352, which is also supposed to come on the debit side. Then you say this total minus all what we have on debit, we are subtracting 2,808, we are subtracting 7,200, we are subtracting 3,900. We are going to get a balancing figure of 145. Sorry, we can just Try to remove this. So we are trying, you get a balancing figure of 145,372. So here we give a description of the balance that you are having in the bank account. So you'll see that it's a CD on the debit, so it's going to be a credit balance in the bank statement. So the BD will be on credit, so it's a credit balance. So if it's a credit balance in the bank statement, it's a debit balance in the bank account. So here we describe it from the point of view of the bank account. So we are saying this is a debit balance, debit balance as per bank account. As per bank account. 145,372. So you have to also take note that this balance that we got there, to say we have reconciled correctly, the balance that the final balance that you are going to get in the bank reconciliation, which is this one, is supposed to be the same balance that you should have in your bank account. So if you go to a bank account, you see that the final balance that we got also is the same. So we are having the same balance here. This is 145,372 to say we have reconciled correctly. So that's the purpose of reconciliation. What we are trying to do, we are trying to make the two balances of the two documents to be the same. The document number one, we have the bank account in our ledger. Document number two is the bank statement from the bank. So basically, as we are saying that our bank account that we're having in our ledger is a reflection of what is in the bank statement. So exactly as we are saying, what appears on the bank statement should appear also in the bank account in our ledger. If there's a difference, there's a need for bank reconciliation so that we reconcile the balance, the difference between the two balances by correction of the errors that transpire. So this is what we have, guys, according to this video on the bank reconciliation statement. Hopefully this video was helpful. Let's stay tuned for more videos to come. Let's get notified. Let's turn on the notification button. Let's subscribe and share. Let's share the link to our colleagues who are doing financial accounting info. Let's take accounting space to the next level by subscribing so that our channel grows. So let's meet again in the next video. As for this video, I'm signing out.